Happy Friday, Market Chameleons. Everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man all the way from the city that breathes brotherly love. That would be Philadelphia. How you doing, D?
Hey, Will, how's it going?
Good.
I think you don't have the disclaimer up there.
Yeah, no, I don't. I've got the
Yep.
Problem right now with the sound. All right, there we go. Disclaimer back up right now.
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And with that, let me share my screen. And while I'm doing that, if you guys are joining us for the first time, Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you'd like to come on a show and ask a question live, we provide a link to Zoom on that live chat on YouTube. If you click on it, it takes you over to Zoom. When you're in Zoom, there's a button there, raise your hand. Click on that. Once you're in, you can ask your question live. If you prefer to ask your question by just typing it in, you can type that in on the live chat on YouTube. Who's watching, he'll read it back to me. Okay, so while we're waiting for more people to join us and for those questions to come in, what we'll do is start out taking a look at the pre-market report, see if we could get some insights in the pre-market hours. I'm going to navigate also. We did start pushing out some new features and updates to features. I know I've been getting some emails with you guys seeing some changes. So what I'll do is navigate to some of those features that I've been getting the most questions on, go over that piece. So let's start out with the pre-market report. If we don't get questions, well, I'll move on to the new features. If we do, let me know, and I try to answer those as well.
Perfect.
So pre-market report, these are stocks trading in pre-market hours. I'm going to come down here to look at these lists, and we see we have the most active stocks, the biggest percentage gainers, biggest percentage decliners. I got 37 stocks that made our percentage gainers list, 52 in our decliners. So right now, from this perspective, we're looking like we're set up for a bearish bias at the open. So what we'll do is now we want to narrow down these stocks to a smaller group of stocks, because if you look closer, you'll see that there are stocks in there that are small cap stocks. We have ETFs in there, leverage products, pretty much anything that's listed on the major U.S. exchange. It's trading in pre-market hours and meets our thresholds, it could make this list. And what we'll do is use the filters here above. I'm going to use this one right now in ETF. And when you click on it, it gives you a drop down to select from a list of different ETFs. The top ones, those are the broad-based ETFs. Then you got some sector ETFs in here. So let's choose SPY, the S&P 500 ETF. Click on that, and the list below will get filtered by holdings, or stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we see 4 stocks made our percentage gainers list, 6 on the decliners. So not a big list, maybe slightly bearish bias at the open, but pretty neutral, not that many on either list. Couple standouts here. Amazon reported earnings yesterday. I think they were initially up after the report. Then Amazon came out with some guidance about they're seeing slower demand in their cloud, and that then the stock reversed yesterday. In after hours, we're down 2.7%. And Intel, looks like that popped. I think that reported better than expected. They've been really struggling for a long time. And their revenues dropped significantly, but maybe at this point they might have already reached bottom. Who knows? But I know they've been struggling for a really long time, especially like you'd think like, the chips have been as a whole, right, have been doing well. Probably NVIDIA has been driving that sector up a lot. But those are the two kind of standouts there. If we don't have questions, we'll, give it a couple minutes. What I'll do is move on, maybe give some insights on the new features.
Perfect.
Or actually, even before I do that, I did want to mention, one of the things that I think the markets are looking at are obviously inflation and growth, right? This has been a big topic, headline news. What's going on with inflation? What is the Fed going to do? Is inflation, going to come down, go down this year to the point where the Fed could even decrease rates? And a lot of people, I think there was an article today in Bloomberg that hedge funds are actually starting to position themselves by shorting the treasuries, shorting the long term, in expectations that the yields will stay higher for longer, and that 10-year treasury, the yields will start to come back up. And I think I mentioned before in a show about one of the inflationary things is deficit spending. So, the government basically spends more every year than it brings in, right? So, which is okay during deflationary times, when you need to move the economy higher, you're going to deficit spend to reinflate and boost activity. But right now we're doing it in a period where inflation is high and productivity is we're at full employment, productivity is coming down. And I wanted to clear it up because I think it's okay when you could deficit spend if you are growing your GDP. So think of it as, well, I'm adding to the debt every year, like maybe I'm borrowing more every year. Like last year I borrowed 100,000, then I borrowed another 5,000, then I borrowed another 5,000 every year. So my debt is growing, but that could be okay if my income is growing, right? So if you're making 100,000 one year, then you're making 110, then you're making 120. So if your income is growing, you could kind of keep borrowing more and more, because on a relative basis, your income can be growing faster than your borrow, right? So as long as your income's growing, you could borrow more money, right? You could borrow, if you're making 100,000, you could borrow X amount, but if you're making 200,000 the next year, well, you could borrow more money because you're making more. So we call that as in the economic terms, right? To simplify, we would say it's our debt relative to our GDP. So debt is what we're borrowing, GDP is kind of our income, right? That's what we're producing. That's our productivity. And I'm going to show you guys what is concerning, why I think the inflationary pressure will stay up, is that this is our debt. So our debt keeps growing as a percentage of our GDP. So let's say GDP is our income. That's what we're producing, right? So if our income is growing, well, we could grow our debt. But if our debt is growing at a faster clip, then we're increasing our income, then this ratio will keep rising, right? This percentage will keep rising because this is debt versus GDP. And this is what's happening right now, is that this keeps climbing, right? Keeps climbing more and more. And what else could make it climb is that of course, we could just keep borrowing faster than our income's growing, or we could keep borrowing, and if our income goes down, right, recession, our income goes down, this will also explode. And that will be inflation, and that will still be inflationary. And what I think is starting, to become a higher and higher probability, and we talked about is stagflation. I think Bloomberg even wrote about it today. There was an article like things are starting to look more like we're going down the road of stagflation, right? So inflation might slow down a little bit, it might dip, but then there's still these inflationary pressures there where, we're still deficit spending, but our GDP is going down, and that creates inflationary pressures. And this is another chart just to show you guys what's going on. So this chart is showing our surplus or deficit as a percentage of our GDP. Okay, so how much more, deficit or we had to borrow, spend above as a percentage of our income. And here you see that even though it's not as bad, it fell down to 2020, down to 15%, which is a lot of it was due that our GDP went down, right? So we went way up in spending and our GDP fell down, but then we kind of reinflated our way out. But here, we're still here at 5.4%. So think of it as like, 5.4%, but if your GDP is grown only at 1%, it just means we're still accelerating our borrowing faster than our income. And that could, in my opinion, that is inflationary and could lead us into a period of stagflation where, we're just, our growth it'll slow down, but the inflation will continue to go up. And we've seen that before, that could happen. Like I think the original models thought that doesn't happen. If growth slows down, people spend less, and then you get deflation. But we can see the opposite where we're seeing slower growth or growth, at 1%, but our debt is growing, at a much faster pace, which I think will be then inflationary. So just kind of wanted to show you, a couple models or a couple charts, to consider. I'm gonna then come back here. Will, I guess at this point, we allowed people to come up with questions.
We did have actually something just popped in from Michael McCrae. He said, I went to the interactive chart page and changed the percent value in the calculated box to the right of the pie chart, but don't see any changes in the pie chart. I don't think it was in the pie chart that the values changed. I just think was it D?
No, let me see, but I forget what we're doing. Intel. So I'm going to come back here. This is the earnings interactive charts. And when we go to I forget what I was doing, actual earnings here. So just to recap, here I'm on Intel, and I'm looking at Intel's historical earnings. Okay, so these are the historical earnings reactions, what the stock did. The green bar says the stock was up, the red was down, but we're looking at the magnitudes of the moves. So then we could see, on average, what did the stock actually move? So on average, up or down, 15.67%. The biggest move it made historically was 16.2, lows 0.4, the median move 5.7. And we could see to the upside, the biggest move 10.7, to the downside 16.2, and so forth. So when we're looking at, at what we wanted to do, I think yesterday, was figure out, well, what is the percentage out of the observations that we're looking at, from here to here, right? We wanted to know, well, if I'm going to do a straddle, I believe if I'm going to do a straddle that's the strikes are 10% away, let's say. So I'm going to go back here to the implied move. I'm going to say, well, the last implied move was 7.4, right? So the straddle was priced at 7.4, let's say. So I'm going to come back here. I'm going to say, well, if I did a straddle, I think you doubled it, right? Let's say 15% away in either direction. If I believe his strategy was, I'm going to sell a put 15% below the strike, and I'm going to sell a call 15% above the strike, right? So the question was, well, what percentage of the time did the stock move outside of that 15% range? Because if you're selling it, you're basically betting that the stop move will be inside that 15% range, right? And the question is, well, how often did it go outside? So the outside, you could consider your loss, the inside, let's say, the win. So if I put in here, this is the percentile rank, and I'm looking at these, and I want to know how many of these observations were below 15%, up or down. So I'm going to put that in the calculator here, 15. I'm going to calculate it, and then it gives me the number. So 97% of the time, the stock moved less than 15% after the release, either up or down. So 3% of these observations, it moved beyond 15%. Okay, so let's say I wanted to change this data and say, okay, I don't think these data points are as relevant because, up to 2019, let's say Intel's business was better, it wasn't as volatile, it was more predictive. Now it's less predictive, they're going through changes. So I'm going to take this data and I'm going to narrow it down to the last 4 years. I'm going to click that. And when you click these filters, it's going to recalculate everything and show you new data for the last 4 years. So you can see now the average move is higher, 7.7%. It's been down more than up. So all of a sudden, these changed when we're looking at the more recent data. And then we could come back here. I think I've already recalculated. And here, now we see a different picture that 94% of the time, it was below 15%. Okay, what if I narrowed it down further and said, well, you know what? Maybe the first quarter behaves differently than all the other quarters, right? And I want to see what it does just the first quarter. Okay, so let's click on quarter one. So now what it does is goes last 4 years, finds what it did the first quarter, right? And then it'll give us a different. So in the first quarter, so far, given this data, it hasn't moved beyond 15% after reporting earnings. So I get a question sometimes, what is the right data set you should be using? And it's not about there is no right data set, because there's no way to say, if you use 4 years, that's the right data set, and then you'll always get the right answer, or 6 years. It's looking at data from different perspectives, right? Because then we could see how consistent it was, how it's changed over time, the different ranges of possibilities when we change the assumptions. So, I do get this question. Well, just tell me which is the right one.
D?
This one and this one. Yeah.
Could you just And I apologize.
Yeah.
That there is a delay between the YouTube and the Zoom. Could you just click to how you got to that page?
Yeah. So when you're on the interactive charts, on the side here, right, we put these tabs here, so you could click on them. So here's a summary. We talked about this. This is kind of the summary data of historicals. These are the implied moves. These are actual, so we could kind of compare them here. But then if you want to go deeper into the data and say, what about the implied moves? If you click on this, it'll take you over, or click on one of these tabs. So implied earnings moves could come down here. And here we see that Intel was anticipating a move of 7.4%, right? Did they just report? So there you go. They just reported yesterday, right? 6.8%. So they're anticipating the implieds were saying 7.4% in either direction. So you can see that's higher than the long-term average, because you see the long-term average 4.9%. So it was on the high end. But what if we narrowed down that data? And like we said, well, Intel's been experiencing a different market conditions than before. So in 2014, 2015, 2016, it was a different story. And we could kind of see that by the chart, right? We see that just in the chart alone, that it's a different story over here than over here. If we compare this data, the more recent data, it looks different than the data over here. You know, it's higher. So, and we could do that by narrowing it down, let's say for 2 years, right? If this is the average of all the implied moves going to 2014, what is it for 2 years? So here, 2 years, 6.8. So you could see that things can change and shift, and you will have differences as time progresses, right? Conditions change, market conditions change, the company conditions change, and that's why you have to look at it from different perspectives. So in this situation, if we just took the last 2 years, so yesterday the implied move was 7.4%. That is higher than the average, 6.8, a little bit, but you could see here that it's been higher, 9.9, been lower, 4.6. These are the ranges. So that's from the perspective of the implied move. That's from what were the predictions prior to the earnings. And then you could go over here and compare it to the actual earnings in the last 2 years. So on average, in the last 2 years, the stock moved up or down 7.6%. Okay. And again, these are the other stats: as high as 11.7, as low as 5.3, median move 6.9. And you can see the move to the high of the move to the low, and the median move. Okay. So that's how you do. And if you wanted to see, I think in my case, well, if the implied move was 7%, again, if I doubled it 14%, then so far it hasn't moved beyond 14% after reporting earnings using this data. Hopefully that helps.
Yeah, that's great.
Yep. So what I wanted to do really quickly is let me move like to Microsoft here. And we updated, we did make lots of updates on the website. One of them is to this price action. And this breaks down the trading activity into different parts to get different insights. Okay, so if we take a look at the stock, usually what you'll see is, okay, here's the volume. We traded 43 million. Is that higher or lower than average? And And that's on the top level, but we could also break down the volume into lots of different pieces to get better insights of what's going on, who might be doing what, and so forth. And I'm going to go back one day because we just started out here, but I'm going to go back one day, and you have the summary page here. It's on here. And then you have these tabs here that you could click on to get more insights about, pre-market, trading hours, closing, after hours, dark pool trading. And we're still working on this. I had to push it out earlier. So you're getting like a preview, but this will be changing as well because I'm still working on this internally. But let's go back to the summary page. We have 5 minutes and we'll talk about what's going on in the summary page. And when we look at a stock trading activity for the day, we could first break it up into 5 main sessions. And these 5 main sessions could give you a different indicator of who might be doing what. Okay, so we know we have the pre-market session. That's at 4 a.m. You can, trade most stocks in the pre-market hours. It's not the same rules or it's not the same liquidity, and it's not the same players as you would get during regular trading hours. And we'll talk about that more. But we have a pre-market session between 4 a.m. and 9:30 a.m. All right. Then we have another session. It's called, it's opening cross or opening auction. And this is where people who can't trade in a pre-market hours, maybe they're not approved, maybe it's, someone who's just, not allowed to trade in a pre-market hours for whatever reason. If they enter in their orders prior to pre-market hours, what happens is it gets put on a order book that goes through an auction process and opens at one price. So the specialist will take all these orders that queued up from the buy side and sell side, and come up with a fair value price where he maximizes the most, executions. Sometimes the specialist will have to step in from his own inventory if there's a big imbalance to buy and sell. So we'll talk about the importance of that as well. So these two are going to give us certain insights that we'll come back to, but we're dividing these sections up. Okay. Then we got regular trading hours, and regular trading hours, pretty much anybody could trade. And that's where you get to see the most volume. And there are certain traders that don't trade in a pre-market or even the opening cross that those trades will kick in. So passive orders, VWAP orders, right? Because VWAP orders need to have a VWAP to track, and that only happens during regular trading hours.
D?
Yeah.
We're getting a question from Chris. He's saying, is this a beta version or a subscriber only version, as the web version only shows ETF financial ratios under fundamental?
This is under stock price action.
Yeah, just show them how you link to where you are.
Yeah, so if you go on a stock, just put in a stock wherever you are on the stock page, on the summary page, you land. If you put in a symbol here, you'll land to a page like this, a summary page. And then on the left-hand side, you have a stock menu, and under price action. Okay, so what I did was I went back one day, April 27th. So because today, we're only in the pre-market session right now. So really quickly, I'm going to talk about more of this. We have, so the regular hours, you're going to have institutions trading it, VWAPs trading in passive orders, pensions. You're going to have trades that are as a result of, options that are trading on the day, hedges. You're going to have, high frequency traders. You're going to have models that are pegged to things. All that's going in there. Okay. All of it mixed in together. Then we have a closing cross. So the closing cross is another auction type. It was made for a certain type of trader, but anybody can trade it, but but when we talk about a closing cross, it's a specific order type. Okay, so it's not the same thing as if you put in a limit order near the close. There's an order type that you want the closing price. You need the exact closing price to buy or sell. And that happens because certain institutions need it, like a mutual fund, right? A mutual fund that creates or redeems units does it based on the NAV, and the NAV of each unit is based on the closing prices, right? So we'll give to all, we're going to have to talk about each one of these individual and the importance of it into painting the big picture. And then after hours, that is similar to like the pre-market, but that's coming after 4 o'clock. All of a sudden, you don't have the same types of players again, like the VWAP orders and so forth, but you do have those active traders, reacting to real-time information, trading in the after hours. And that goes till 8 p.m., from 4 to 8 p.m. So these are different sessions, and these are the top numbers where we have we have the volumes, the VWAP prices, so we could see how the prices relate to each other, how they progress. We have the volumes and the relative volumes, so we could see where the volumes are picking up relative to this session. So what is the average volume in the pre-market versus today's pre-market? What is the average opening versus today's opening, and so forth? And you kind of could see this graphically here. Then we could go into more details about each one. So we're past 9:30, but we'll start talking about it more and what the price action in each one can tell us about, certain insights, that we could get by dividing them up. All right.
Well,
So
great job, D. I know Michael McCrae's bell went off like 3 minutes ago and had to leave.
Okay.
But I just wanted to let you know, Vlad said I'm usually on and off in the morning show, but I'm always watching these videos after so I can catch up. This is a great show.
Awesome.
And then Mike reiterated the great show part, which is it's always nice to hear, because we don't get millions of views, but it is nice to hear that people are enjoying the information you put out, which is great.
Yep. Thanks, everyone. Guys, thanks for joining. Stay safe out there. Have a great weekend. Have a great trading day. We hope to see you guys on